Hello, hello, community. Happy Thursday to all of us. Welcome to today's community event on this beautiful Thursday. We are thrilled to have you here with us on this YouTube live community event. As always, we always aim to bring the community together so that we can be informed, educated, and inspired. We use these sessions to really highlight and break down complex topics and make them break them down into digestible, easily digestible bites that we can all understand. Crypto is such a loosely used term, but actually it's best described as the blockchain, right? Because blockchain is a technology. Crypto are just the cryptographic aspects used, the technology used behind it. But it's the blockchain technology as a whole that is so significant. It's so interesting. It's so powerful, and there's so much that can be done with it. So today's topic gave it literally away. Blockchain, how economy works, right? I believe it's very important for us to really, before we can appreciate something, it's always good to look at things from a bird's eye view, right? Let's look at things for what they really are on a bigger, from a faraway perspective, so we can see and behold the whole thing. And we don't limit the crypto industry, the blockchain industry, just for speculative and just swapping meme coins, right? But it's a technology that, when used wisely and strategically, it can really make major differences in how the economy, as we know today in our traditional financial industries, work, right? And this is what we're going to highlight and shed some light on today in very simple ways with great examples, backed by great resources, sources that we from articles, and hopefully we'll be able to take away something from today's session. So once more, welcome everyone to today's session. Those that are new, tuned in for the first time, we're pleased to have you here with us today. It's always a pleasure. I always want to encourage that if you're not part of this community yet, we are a very, very active community. We are actively daily on Zoom, 5 times a week on also on Zoom, like I said, on Twitter and on YouTube like today. And our number one of our 4 pillars, let me put it like that, is education. We stress heavily on education because we understand that the more informed and educated we are as a community, as an industry, the more awareness will be able to spread across borders, right? So our focus is always on fundamentals, on solutions, identifying the challenges in the industry, finding solutions for them, highlighting those solutions based on the smart contracts we deployed on our ecosystem, and also understanding beyond crypto, going outside of crypto borders and understanding how money works, how finance works, how economics works, how our monetary system currently works, how inflation affects liquidity, how liquidity affects boom and bust cycles. These are all basic knowledge, basic understandings that we are supposed to understand freely as crypto enthusiasts, as blockchain enthusiasts, right? It helps us. Why is this so important? Because this industry and financial industry across the board is led by sentiments, led by emotions, right? And understanding and clarity eases all those emotions, right? It allows us to think rationally, to stay calm when everything else seems to be falling apart, when the markets are volatile. It gives us a level head to really soak things in, take a deep breath, and just relax, right? And look at things for what they are and not based on sentiment and emotions. So with that said, I also want to welcome everyone that is regularly participating in these events. We are very pleased to have you here with us today. And this blockchain technology is so powerful, and it gives us the opportunity to develop something in the early stages that we might not appreciate now because it's still a wild, wild west. But in the mid to long term, just like we've seen many institutions, many projects during the dot-com bubble or during the mobile application phase frenzy took advantage of these new technologies, developed something with strong fundamentals, which will account for longevity and which is built in the best interest of its consumers, of the community. And those are the ones that usually last and are still around for many years. They might not be interesting at first because they're not flashy, shiny, and making all these promises, right? But rather focusing on fundamentals and understanding the industry, understanding the challenges we're facing, addressing them, and then growing organically, right? That's our aim, that's our goal. And we aim to do it as a collective, as a community. With that said, I'm not going to forget about the comments that you put out. We're going to come full circle and address them. So I appreciate all the comments already that are out there. Appreciate them. And I also see that Queen Val already put out some links to our Telegram groups. So feel free to join our Telegram group, follow us on Twitter, be part of this movement. It's all about education. It's all about growth, understanding the markets, the challenges, embracing them, and then being enlightened on how our ecosystem is using the blockchain technology to address these challenges. Also, as always, we have our daily activities, which are tweets. So we always put the tweets out, not just for the fun of it, but every tweet has a message to encourage, inspire, inform, educate, and just to bring awareness on our industry, on our ecosystem as well. So we as a community, we owe it to ourselves to engage, to participate, because that's how we put the word out. That's how we remain active, and that's the little contribution that we can make. Also, on this note, I want to thank everyone that took their time on this Thursday to participate in these weekly events. It goes a very long way. So with that said, community, let's get right into today's session. There is really quite a bit to discuss today. And as always, as we're discussing and you have any questions, you need more clarity, feel free to write it on the comments. We'll come full circle and then we'll go through all those comments together and we'll answer the questions. We'll dissect your feedbacks and we'll go through them one by one. So with that said, community, bear with me as I'm about to share my screen here so we can kickstart today's session. And as always, I always like to kickstart with, let me refresh here, with the coin market cap. Let's understand where we are so we can appreciate where we're heading, right? So today, as we see, the market is a bit down. We're still at 3.15 trillion in terms of market cap right here. And that's our market cap. We're down roughly 1%. So it's really sideways. Bitcoin is roughly 95,000. Ethereum is at 26. There's really nothing much else to say. What's interesting is the fear and greed index is at 40 right now. Bitcoin is still dominating the based on market cap by 60%. So this also just shows us that whatever Bitcoin does, it really has a major impact on the rest of the market, because imagine the difference. The largest Bitcoin with 60% and the second largest, which is Ethereum, only sits at 10%. So even though the top two cryptocurrencies, and there's millions of them, dominate by 70%, you just see the major gap between the number one cryptocurrency and the number two cryptocurrency. There's a 50% gap in between. So this just shows you that whatever is happening with Bitcoin, whether it's a positive sentiment or negative sentiment, it literally affects the rest of the entire industry, right? And similar with the Ethereum, if Ethereum starts picking up and flying, it affects the industry way more than Bitcoin does, because like we know, most of the applications, DeFi, stable coins, real world assets are built on Ethereum. That's the reason why, right? So that's it for that. Let's get straight to today's session, today's topic. And to really understand that, I like to always start with the basics, right? Let's go to the basics. Again, blockchain, how economy works. As always, I like to start with a mind map, a mental mind map, so that we have a roadmap that we can follow along mentally. And to set the stage, let's go quickly. I'm not going to bore you with details and economic terms and all that. We're just going to look at a few things here from this beautiful article to just lay the foundation and understand how economy works. After this, we'll dive into our crypto space and then build parallels and understand why things happen, right? And let's start with that. Let's understand how economy works and what makes economy grow. What is it, right? So just briefly, broadly speaking, an economy is an interrelated system of human labor, exchange, and consumption. Very straightforward, very, very simple, right? And another thing that I really want us to understand here is that individuals trade with each other, right? It's all about transactions. This is nothing new. We've been discussing this. Economy is all about transaction. So individuals trade. Trading means transactions with each other to improve their standards of living, etc., right? And another thing is productivity, right? They improve their standards of living. How? Through productivity, more productivity. This is why you often see that if nations talk about productivity, there's a measure that is being used, a standard that is being used, known as the GDP, gross domestic product. That just basically means how much does that nation produce, right? How much value do they produce? And it's always it can be measured in obviously the US dollar, right? Or whatever the nation's local currency is, but it's based on fiat. It's measured by fiat output that is put out there, right? So productivity is driven by specialization, technological innovation, working capital, so on and so forth, right? So now this is the takeaway here. The only sustainable, we're talking about sustainable, the only sustainable way for an economy to grow is through increased productivity. These are not my words. These are just basic economic fundamentals, right? You need productivity, and the only sustainable way for an economy to grow is through increased productivity, right? So what is productivity? Productivity is what we've been discussing, trades. You see trades happening, so on and so forth. It's transactions. That's how economy works. It's trading, meaning you need transactions. And of course, for productivity, you need liquidity. So trades are only triggered through sustainable trades. And a sustainable economy is only through growth, increased productivity. Productivity are two things. You need transactions, you need liquidity. Simple as that. That's the takeaway. Now, let's skip all of this and come right here. Let's look at the players in the economy, right? In the economic formation, who are the key players here? This is another very important thing for us to understand. Now that we understand that economy is all about productivity, if you need a sustainable, the only sustainable way for economy to grow is through productivity, and productivity are two things: transactions and liquidity brings productivity. That's the only sustainable way to run an economy. Let's keep this in mind. Now, let's look at the players. The number one player within an economy is one that we always talk about and we care about the most, you and I, the retailers. Retailers account for 70% of all economic activities, right? Globally. Without retailers, there is no economy. Who else is going to spend, invest, buy, trade? We are the only ones. So we are at the heart of an economy. Let's keep this in mind. So in some respects, households are the backbone of an economy. The backbone, literally. Without Retailers, without you and I, there is no economy, right? So households refer to individual consumers and families and their drive economic activity through their consumption of goods and services. So without us, all these businesses, all these regulations, who is going to consume them? Who is going to abide by them, right? All these goods and services are only as good as us using, consuming, trading them, right? So, and another thing we need to understand with the households, with retailers, is the financial decisions made by households, retailers, such as spending, saving, investing, collectively impact the overall economic health. I mean, this brings us straight to the point. I love this article right here. This literally sums it all up beautifully, what retailers is all about. The backbone, right, of an economy. Their financial decisions impact how they spend, they save, they invest as a collective, impact the overall economic health, right? This is exactly what economy is all about. And retailers, you and I, are the backbone of the economy. Okay, who are the other players, right? Businesses, of course, right? So what good would having income be if there were no goods and services to buy or to use, right? So businesses, of course, also play a major role. And the reason why businesses play a major role here and how they are contributing is they're the ones that are ranging from small to large enterprises, but what they're coming in is by the producing, right? They're producing and distributing services, goods, and are distributing products. They're producing those goods that then we retailers will be able to consume, use, trade, what have you, right? So that's all that really the takeaway from there. In terms of government is they're here for the physical policy, regulations. They set the regulations. That's the major thing right here, right? That's the major takeaway. And what we need to look at and focus on now is this right here. This is the heart of today's session right here. This is what we need to understand the most. So what is an economy? We understand that. But if we focus now on finance specifically, on the financial part of it, this right here says it all, what we need to understand, right? So an important part of growing an economy is the ability to capture credit. You can call it credit, you can call it liquidity, you can call it fiat, you can call it cash, you can call it whatever you want. But the bottom line is liquidity, just like we said earlier. Productivity is liquidity, like it says here, right? An important part of growing an economy is the ability to capture credit, capture liquidity. And you remember above, we just discussed that for an economy, the only sustainable way for an economy to function is productivity. So these are the two things. You need productivity, but then banks are the ones that issue liquidity. So these are the two things. You need transactions, but how can you run transactions without liquidity? It's impossible. So that's where the banks or financial institutions come in. They're the ones issuing or flooding liquidity so that businesses, retailers, businesses can produce the products and retailers can consume and trade and purchase those goods. That's how an economy works, right? Very straightforward, very basic, very simple. So another thing we need to understand here is that if, for example, a bank, a small business doesn't have enough money, or retailers don't have enough money, remember that's why there's credit cards. That's why you can go and take a small loan, and banks facilitate that. They facilitate the flow of money by providing financial services such as what? Loans, savings accounts, investment products, right? Straightforward, very simple. So to help shape an economy, a bank may loan that small business owner capital. It will flood it with liquidity. It will flood the retailer with liquidity. So businesses produce, taking loans from the banks, consumers purchase and use these services from loan from the bank. It takes two. The retailers consume, retailers and businesses consume, transact, and the bank provides liquidity. That's how economy works. Can you imagine? Very simple, very straightforward. There's really nothing much to it. Within the last 5 minutes, we learned how economy works. Now we have the foundation set. But let's come back to all of this and understand, just highlight things. Look at these services, providing loans. This is how it is right now. But now, remember the topic is blockchain. How can we use all of this knowledge that we have and now implement all of these things using the blockchain technology? Now let's bring all of our knowledge on the blockchain. Now, how will the economy look then? How will our economy look using the blockchain technology? Not needing a middle intermediary like a bank to get our loans, to have savings accounts and investment products. How will it look using the blockchain technology? Let's just have a few insights here. This is how it would look, community. This is an article just came out yesterday, and this is one of the very famous crypto exchanges. And they got regulatory clarity and approval by the Financial Conduct and Authority of United Kingdom, England. Now they are free to offer in the UK access to over 500 crypto assets, digital assets for trade, staking, right? And saving plans and crypto products. Where did we see this before? Where did we see all of this? Let's go back a step and look at this again. Now we understand how economy works, right? For an economy to work, you need productivity. And productivity means transactions. Transactions, who are responsible for transactions? 70% the retailers, you and I, households, 30% businesses, right? And who is in charge of providing the liquidity, flooding it through? The banks. They're in charge for us to capture credit, which is, you can call it liquidity, fiat, whatever you want to call it. And this is how it is, right? And the banks are facilitating the flow of money by providing financial services such as loans, savings accounts, investments, products, and so on and so forth. Now, if we move here, and like we say, we want to focus on the blockchain. And now it's regulated by the Financial Conduct Authority, and a crypto project, a crypto company can now come and offer over 500 assets. They offer staking, they offer savings plans and investment products. Boom, right there. It's on chain, right? Everything is on chain right now. Trustless, permissionless. Everybody with a wallet, DeFi wallet, can jump on it. Because it's a centralized exchange, you have to go through KYC, obviously, and all of that. However, you can use this on chain and you can take advantage of all of these without the traditional bank intermediary, no bank in between, right? And you can still have the same access to the same products that banks are actually offering, right? A bunch of digital assets, you can stake, earn yield, you can use savings plans again, and you can have financial products that is being regulated and issued. And this is one of the moves that are being made right now, right? So this is just half of it. What else does it take for an economy to run? Now, this is the next step now. You can have crypto-backed loans now, right? It can be Bitcoin backed, Ethereum, whatever, a solid or stable coin, right? It can be backed. Those loans can be backed by crypto assets. No banks are needed. No paperworks are needed. It's pure on-chain finance, right? You can do all of these things on-chain. And it's about bringing the world on-chain to create a global economy. That's what you need. Built on Ethereum, built on the superchain. So we just understood within 5 minutes how economy works: productivity, liquidity. The players are you and I, retailers, businesses, banks. Businesses and retailers are the consumers. We are heavily into productivity, meaning transacting, right? Retailers consume, businesses produce, banks provide liquidity. That's how economy works. But now on chain, how about you can use your digital assets that you have and use them as loans? Take out loans by backing those assets. No banks needed, no paperwork. It's purely on chain, right? And also, you already have access to 500 other assets that you could use as collateral. You can earn yield through staking, and you have savings plans, right? You can add to your 401k, or you can add to your pension plan or savings plan or retirement plans using digital assets. And you have other banking products, financial products as well. So basically, the takeaway of what we're trying to show you here, community, is that the technology is here. The technology to bring things on chain is already here. And to take it even further, to flex even further, and to just show that the technology indeed is already here, is look at the locked value, total locked value. This is how much value, how much liquidity, how much assets are on in this industry overall. These are all, you see, we have the blue tab here, all of it, roughly 109 billion. Out of the 109 billion, these top 5 chains are all Ethereum. Okay, don't take my word for it. Let's click on Ethereum. And you quickly see here that it's still the same 5. They're still the same 5: Lido, Aave, Eigenlayer, EtherFi, Ethena, right? They're the same 5. Whether I go to Ethereum or all, Ethereum applications are dominating. They're the top 5. And even Maker is on Ethereum as well. But let's just stick to the top 5. And if you calculate these total locked value, just for the top 5, you come to over 70 billion. Actually, 75 billion. So 75 billion out of the 108, that's more than 70%. So just 5 applications that are Ethereum based have over 70% of the whole value that is in the industry as a whole. So this just shows you that what we've discussed so far, we have staking plays a major role because we are on a proof of stake consensus blockchain. And why is staking so important? It's not just to earn yield, but the yield is just to literally incentivize those who are doing 2 things. Because you staking your tokens, you are doing 2 things. You're strengthening, you're bringing stability to that ecosystem, and then you're bringing security as well. Because staking stabilizes, stops, or brings down volatility. And secondly, it secures the network. That's how networks are secured. The more staked, the more secure the networks are, or the ecosystem is. This is why staking is very important, and it's at the heart of any proof of stake blockchain. So this is why you see the leading applications are staking based. Lido by far staking. Aave is a lending platform. It does what we need to have a healthy economy. You can lend and borrow, and you can also stake, but it's not specifically for staking. However, you using your assets as collateral, you're literally staking. That's basically what you're doing. And so if it's not staking, it's lending. You see another staking, another staking. It's all about staking and earning yield. So these applications alone are decentralized versions of what we know in the traditional world as banks. Why would you need a bank now if you have Aave? Now you can use your assets, be it Bitcoin, Ethereum, stable coins, and take out your own loans. No banks needed, no paperwork needed. It can be 3 in the morning on a Saturday, and you can take out a loan on your own, backed by your own digital assets, no receipts, no bank paperwork, no banks needed. Everything is on chain, right? That's how you create a global economy. Borderless, no geographics needed, nobody is restricted or limited. You can use that. These are decentralized applications. If you want to get some yield, you can do the same thing. You can secure the network, bring stability, and you get staking distributions as an incentive, right? Whether these incentives, staking incentives, are sustainable, whether they are causing inflation, that's a whole different story that we'll look at the end of the session. However, the bottom line, the takeaway here is that the technology is here, the applications are here to do exactly the same things that we've been doing in the traditional industry, but the applications are here. Now, these applications are not your fancy, glittering, shiny meme coins. They're not even, most of us maybe have never even heard about them, right? They're not interesting, but they are actually the backbone of an economy. They're very important applications to secure networks. You can earn yield, borrow, lending, how economy runs in a decentralized manner, right? So let's take this to another level now. Now that we've learned about all of that, let's now take this further. Let's understand another thing. Right now, we've just been discussing on how economy works, the players and the applications, and where all that takes place. Now, let's look at how is the layer that we are building on, which is a next upgrade that is coming next month. Let's look at Ethereum's next upgrade and how they're working together with financial institutions hand in hand to make all of this a reality, right? Because it's one thing to use your digital assets as collateral, to borrow, to lend, to stake, but how do you initially get that your fiat turned into cryptocurrency? And this is what we are getting ready to look at. But before we jump there, let's look at the Ethereum blockchain. What's the next upgrade that we can look forward to? And what can we expect come next month? Mid next month, these upgrades are coming, right? So Ethereum's Spectre upgrade will boost 3 things. Scalability is a fancy word of saying you'll be able to make more transactions within one single block, right? You can scale it, and even if it becomes, this will make it even faster as well, right? You can batch transactions together. We will look at that in detail. Staking, it's not a surprise. They're going to improve staking. We're going to look at just in detail how they're going to accomplish that. And of course, gas payment options. They're going to improve this. This is a very, very important points. And these are all will be done with significant tech enhancements, meaning with smart contracts, automated, obviously, right? Ethereum being the largest smart contract blockchain. So just briefly, for us to be able to wrap our heads around what's coming, like we said, what we are looking for, our key futures are right here. There's this thing known as account abstraction. we'll understand soon what that means. Let's keep this in mind. Account abstraction, smart contract optimization, and improved staking. These are the three things that are going to mainly take place in this upgrade. So stakers benefit from higher validator limits, meaning as of now, you can only stake up to 32 ETH as a max per validator, right? If you're a validator, means you need to run hardwares and software, and then you earn Ethereum, right? And you are limited to 32. But now it's opened to 2048 ETH. So this is great, means that you need less equipment, less software to run. And because you can now put in more than 100 times, right? You can literally stake 100 times more ETH than you were previously able to. Less equipment, less software, more efficient, right? And also when you're getting ready to withdraw your ETH, it's more flexible, right? You have a more flexible withdrawal. So these are the changes that they're making. So for us to really understand, just briefly understand and wrap our heads around this, I told you to keep in mind what account abstraction means, right? Basically, this just means it's for flexible gas payments. You can literally batch your transactions to lower the gas fees. You don't have to run transactions individually. You can literally batch them and then run them through one time, or you'll be able to literally pass on the gas fees to a third party, whether it's the centralized exchange, a DeFi platform, or let's say whoever you're sending funds to, they can take on those charges. And this brings us to this next enhancements to smart contracts. Now, wallets will be able to literally have smart contracts on them. You'll be able to literally choose, right? So who's paying the fees? Are you going to pay the fees, or the receiver is going to pay the fees? And these are things that now you can, for wallet creators, they'll be able to work on these, right? And also what you'll be able to do is you can now do all of these, not restricted with on Ethereum alone, but you'll be able to pay these fees with stable coins as well. We're about to see this. And another thing, like we said, improved staking options, right? And staking is really straightforward. Instead of 32, 2048 ETH, you can now stake, and they're making withdrawals much, much more convenient, right? So just to really close this, let's summarize this again, right? So it will be more user-friendly because you have flexible gas payments. You have multiple options. Right now, in order to go through a transaction, you have there's no flexibility. You have to pay that gas fee, and that gas fee needs to be paid in Ethereum. If you don't have Ethereum in your wallet, bad luck. You can't go through the transaction. But now you can, right? In the Ethereum, gas refers to transaction fees that compensate validators, right? And these validators are paid through the transaction fees, which are paid in Ethereum. This is to secure the network. Remember, we said stakers secure the network and stabilize the network. So these are compensations, rewards, distributions for those who are staking, when they're staking, they're securing the network, right? So with account abstraction, once more, you see the word account abstraction here in black. Pectra allows users to pay these fees using ERC20 tokens like USDC instead of being restricted to ETH, just like we were saying. Now, what does this really mean? Why is this so important? It's because now the validators are not only getting paid in ETH, and the validators can sell off ETH and dump on everybody else. But now they can get paid in stable coins, and they don't have to sell ETH and dilute the markets. This is part of the improvements that are being made on Ethereum, that it's there's an option here now, right? There's an option here. And so account abstraction simplifies Ethereum transactions by making wallets function more like smart contracts. This is exactly the difference now. So offering more control over how transactions are executed. Like we said, you can, for example, if I'm sending money to you, I can be like, okay, the person that I don't have to pay the transactions, the person receiving what I'm sending them, they're the ones going to sell transactions. Or if you're an application, if it's an application, the wallet can have smart contracts generated in your wallet that the user of that wallet doesn't pay transaction fees. The wallet issuer is the one covering the fees. This is a huge breakthrough that we might not understand right now, but as we progress throughout this session, it will make a lot of sense. So these are the upgrades that are coming with this new update that is coming next month, right? So again, it's going to be in mid-March 2025. This will be implemented. And the most important thing we need to understand is that account abstraction, once more, allows gas payments in stablecoins. And the increasing staking from 32 to 2048. And this will simplify large-scale validator operations. Why is large-scale validator operation so important? It's because now institutions are being involved now. You see why all of these changes are being done, community, is because this is just to date, February 13th. 21 shares just requested the ability to permit staking now. This is for ETF, Ethereum ETF. The request already went out to the SEC to have the ability for staking for their Ethereum exchange traded funds, right? So these updates and upgrades that we are seeing by Ethereum is not just randomly doing them on their own. They're doing it in discussion, in coordination with these institutions. That's how it's being done. And I want us to really understand one thing here. I really want us to understand one more thing. And this is it right here. So we see here that Ethereum Foundation already said more is coming, including staking research, right? So even the Ethereum Foundation was talking about that and just highlighting that staking is the next big step that is coming. And these are for the institutions, and institutions want more flexibility in terms of how they're paying their fees, who is paying the fees, batching all transactions at once, making things more efficient, having wallets that are more user friendly, and you can pay even if you don't have, you can pay for those fees regardless of having ETH or not, as long as you have stable coins, right? And here we are again. This is the filing by 21 shares for their Ethereum ETF, like we said, and the aim is for the SEC to allow staking to take place. So all of these changes and upgrades are for the institutions, and they are the ones that are really looking forward, like we said here, to simplify large-scale validator operations. Who are the largest cloud computing entities? It's Amazon, Google, Microsoft. They run all these data centers, and they run 98% of the industry is just based on these three. So they don't want to be limited to just 32 ETH staking. They want more, way more. This will simplify their large-scale validator operations, right? Individuals don't have, of course, there are individuals that have over 2,000 ETH. However, as validator, you have different to run a validator node with so much ETH, you need a whole operation, right? And usually there are institutions that do that. So we clearly see that institutions are getting comfortable being involved now in Ethereum, and that's the whole message. That's the whole takeaway from this, right? And the very first one that filed to the SEC to allow staking is 21 shares. 21 shares is roughly the third largest Ethereum ETF issuer. We need to understand that. So one thing that I want us to go back to, community, is account abstraction, right? This sounds so complex. It sounds so complicated, but let's identify what is really meant with account abstraction. We'll see the exact same sentence right here. Now, let me just highlight this and then go up. This is Visa, right? Visa introduces a new way to pay for Ethereum gas fees directly using Visa cards. And this is not a coincidence, community. They've been working together with the Ethereum Foundation to go to pass these upgrades next month, so that large-scale validators and financial institutions will be able to offer all these services in a more convenient way. And this is what it means, right? So account abstraction is what Visa advised the Ethereum Foundation, basically, in conjunction with paymaster contract. Remember, there's another upgrade that Ethereum is making. There's another upgrade that Ethereum decided to make, is because I just realized I wasn't sharing that screen. Here is the screen. So you see here that this is Visa, right? And they're introducing the new way to pay Ethereum gas fees directly using a Visa card. This is in conjunction and in discussion with the Ethereum Foundation. And don't take my word for it. They're telling you here that Visa has finished testing a system to make it easier to pay transaction fees or gas fees. On what? On Ethereum blockchain. So Visa has been working with the Ethereum Foundation to facilitate the Spectra updates that are coming next month. They're the ones also pushing the increase for Ethereum validator staking from 32 to 2048, right? Among others. And remember the fancy words that we kept on hearing, account abstraction, word for word. Visa, this is Visa. They're using the same word, account abstraction. And what it literally means is that you can use your wallets as a paymaster, as a contract. And this is exactly the upgrade, that one of the upgrades that were here, is that it simplifies Ethereum transactions by making wallets function more like smart contracts. So it's obvious that these people have been working together with people, I mean Visa and the Ethereum Foundation, Ethereum developers. They are using the same account abstraction for the Spectra update. This will allow Visa to pay in USDC, because Visa is partnered with USDC, obviously. It also allows Visa to make flexible gas payments, either through Visa card or through batches, or by absorbing the payments all together, right? And making the network more efficient. This is what it's all about, community. And account abstraction means you can use your wallets and they can function as smart contracts. And this is exactly the technology that Visa came up with. They call it paymaster contract. So this paymaster agreement will support users' gas fees, enabling users to pay for gas directly through a Visa card. So now you can pay you can go through those transactions and you don't need ETH. And if you don't have even stable coins, you can just pay with your Visa card. So it's all about convenience. Now, like we said, the testing for this process was conducted on the Ethereum testnet, right? So they're telling us here, Visa has finished testing a system. They've been done it. If they were not finished, there won't be no Spectre update next month. Visa and Ethereum finished all the testing. Everything works great. Like they tell you here, the testing is finished. They did the testing on the Ethereum blockchain. It's now done. It's ready to go. And everything that all the upgrades are coming next month is directly impacting Visa's own, because you remember Visa themselves, they have their own network as well, right? Remember? They have their own platform. Visa introduces the Visa tokenized asset platform. So they've already went through tests of their tokenized asset platform on Ethereum, and it's a done deal, right? And this is to is a new product that helps banks issue fiat tokens, which are stable coins. And it's using on the public blockchain, which is on Ethereum, right? Ethereum blockchain. And this is expected to go live in 2025. So we are in 2025. Remember, these are the things that we were talking about, that these are the reasons why you see all of a sudden staking is now getting ready to be approved for Ethereum. We see institutions wrapping up their tests on Ethereum blockchain and getting ready to go live 2025, right? So let's go back to this right here. Now that we understand that on and offboarding and how Visa already have their platform to help banks to go through all of this, before we get deeper into that, let's stay with decentralized finance and understand how are other decentralized applications such as Uniswap, for example, dealing with this? What are they doing to really improve the user experience? I just like to look at the title here, right? So Uniswap, officially they released their Unichain on mainnet on Ethereum. Unichain is a layer 2 blockchain released on Ethereum, and Uniswap now have their own chain known as Unichain, right? And why did they do this? They did this for two reasons, and that's all I want as a takeaway from here, community. Let's just look at that. Let's just focus on that. So the first one is the role of Unitoken. The role of the Unitoken is it's all about, they call it a network token, and it's for the fee switch, right? And the debate is to just enable the community to participate also in the distribution of the revenues that Uniswap is receiving. Remember, one of the challenges that we're addressing is sustainable staking distributions. Uniswap was eventually running out of rewards because Uniswap has a limited supply. They have a max supply. And that supply started at 60% 7-8 years ago, and now it's down to 28, right around 30%. So half of it is already gone within 7 years. If they would have continued on this track, they would have run out of staking distributions. Why would you run out of staking distributions and you're running a proof of stake application? It doesn't make sense. So this is why they had to come on their own chain and fix their unsustainable staking distributions. And now that they fixed it, they're able to offer 65% of their Unichain revenue. They'll be giving it to the validators, which are the stakers, right? The individuals who are providing liquidity, security and stability. They'll be getting 65% of their revenue that the Unichain is generating to the stakers and the validators, right? Once this program goes live later this year, it's not implemented yet. They're still not doing it, right? So, but this just shows you that they identified that lack of liquid, unsustainable staking distributions is one of the challenges that they are facing. If they don't do anything about it, they'll run out of these distributions. So they had to launch their own token, and now they're sharing the revenue that they're generating with the validators and the stakers, with the token holders. Right? That's the number one thing why they had to launch their own chain. They had to fix their unsustainable staking distributions and make it sustainable. Now, another thing that is very important that they have to improve is what we always talk about, lack of liquidity. They want Unichain to eventually become the generalized liquidity layer for all layer 2 blockchains. So they identified that there's so much fragmentation, meaning they are like here. He noted that the lack of standardization has led to fragmentation, right? Users all over 25 different platforms. Let's look at it. I always like to show. Let's look at Uniswap. Uniswap now is on 31 chains even. Used to be 25 or 26, now it's 31. So look at this fragmentation. How can you be on 31 different chains? This is a challenge. This is not good, right? This causes fragmentation of users. And then applications also. There's too many applications, too many users all over the place, and liquidity across Ethereum. And this is what Uniswap could help address. This is basically what they're addressing with this Unichain as well. So what do they want to address? They want to be a cross-chain liquidity hub. What a surprise. So they want to solve the liquidity challenge. They identified that it's inefficient, unsustainable to be spread out on 31 different blockchains. We want Unichain to be a cross-chain liquidity hub. Adams is the founder of Uniswap. That's what he's saying. And in the long run, his aim is to you'll be able to quickly bridge in and out from Unichain. And the reason why is because they want to make Unichain feel like you're using just one chain. So everybody will be able to come from their respective chains, but the liquidity hub will be on Unichain. That's what the aim is. They want to be the liquidity hub for all layer 2s. They want to address the liquidity challenge. And this is how they want to do it, because they identified that there's too much fragmentations of users, applications, and liquidity on Ethereum blockchain. So this is what they help to address. So they're addressing sustainable staking distributions, and they're addressing the liquidity challenge. 7-8 years after they launched, they identified that we are facing this challenge. We are better off having our own Unichain, and let's bring all the liquidity on that Unichain. Everybody else can just bridge in and out of our chain, but we want to be the liquidity hub. They identified that this is the best way to do it. So these are 2 out of the 4 challenges we face in the industry, right? Lack of liquidity, unsustainable staking distributions, inflation, and now also efficient use or inefficient use of your trading volume, right? Now they can use their volume efficiently because it serves 65% of that trading volume, generates revenue, and it goes to the stakers. What a surprise. They're addressing the challenges. They are addressing the challenges. To do that, they had to come up with an entire blockchain to do that. So, and inflation, of course, now that they can use, not 65% is just for the stakers, and I believe the rest can be used to buy and burn as well. So they'll be able to address, now they're able to address all 4 challenges as well. And it took them 7-8 years and an entire blockchain to do that, right? However, this is what I wanted to share with us in terms of that. Now, they went a step further, Ethereum Foundation, and they realized that there has to be a change. There has to be a change. And before we can appreciate this, let's identify the challenge. Let's look at the challenge, community. I'm not sure if you can see this. Bitcoin news. Maybe let me look it up. Let me look it up real quick. Bitcoin news. And I'm looking for it. As soon as I find it, I can share the screen. Bear with me, community. And what I want to show you is that I want to show you the challenge first. So when I show you the solution, you'll be able to really embrace it. You'll be able to appreciate it. I always like to use the opportunity that we have on YouTube so I can share my screen and we can let me look for it. Brad Garlinghausen. Okay. Yes, I found it. So this is what I wanted to show you. This is the challenge that we're facing right now, right? Let's just quickly look at this. So Brett Garlinghouse, obviously, he's the CEO and founder of XRP, right? XRP, just for the sake of it, let's share this. Let's show you what XRP is. For those who are not familiar with it, it's the 4th largest now. It just got flipped. It's the 4th largest. It used to be the 3rd largest cryptocurrency in the entire industry, just so that we have an idea for those who are not familiar with XRP. So this is the founder and CEO, and what he's saying is that we will not be profitable or cash flow positive without selling our XRP holdings, right? As we see here. This is what he's saying, that in order to be profitable and have a positive cash flow, they have to sell. That's the only way they can be profitable or have a cash flow. They have to sell it, right? So basically it tells Ripple's income comes from dumping these coins on the public, right? So unless they dump their coins to the public, there is no cash flow positive, there is no profitability. Basically, that's what they're saying. And this is the 4th largest. It used to be the 3rd largest cryptocurrency in the entire industry, right? So this is the challenge, community. This is the challenge that we're looking at right now. And I just want us to understand that challenge so that when we look at this, we can appreciate what's happening, right? So back to Ethereum Foundation. Ethereum Foundation has been facing the same challenge, right? They've been also selling. They've been selling their tokens, right? They've been also dumping their tokens to the community, and this sparked a lot of backlash, and they forced the foundation to come up with a solution, right? And they didn't want, okay, right here. The foundation has historically sold ETH for operational purposes, right? They to keep the ecosystem running, to fund the employees and all of that. They were selling Ethereum, dumping on the community, right? But this has been criticized, and community members have also suggested leadership change, la 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 la. But let's stick to this. So they had to sell ETH for operational purposes by dumping on everyone. So this is not just XRP. This is common practice in the crypto industry. This is just how things are done. You dump on your community, using them as exit liquidity to run your operations, basically. That's just how it's done, right? And this is the challenge right now, community, that Ethereum now, the foundation, is addressing. And this is the solution they came up with. They actually, as of today, they injected nearly 120 million worth of ETH into DeFi lending protocols. And why did they do this? Is so that they can, right here, they faced, again, they used 4 DeFi giants receive support from the Ethereum Foundation. So the organization has faced increasing questions about its operational clarity, like having come to under scrutiny for frequent large-scale sell-off to fund operations, like we say, right? So this has been the reason why. But now, February 13th, today, Ethereum Foundation announced on social platform X that it's allocating 45,000 ETH to 4 different DeFi protocols, mainly Aave, which is the largest one, Compound, and Compound. Those are the 2 most largest ones, right? And that's what they're doing. They're allocating these this ETH to them. Why? Because they want to be earning interest so that they don't have to dump ETH on the community. So by staking, by lending their ETH, they'll be earning, for example, Aave, because they're lending ETH. So people will be paying either in Aave or in stablecoin or even in more ETH. But that just means they will not be forced to be dumping their Ethereum on the community. So this is something they came up with to slow down and not to be dumping on the Ethereum individuals. And by supplying its ETH into these protocols, the foundation will start earning yield on its DeFi deposits, right? Which could be seen as a way to appreciate the value of its treasury without selling assets. So this is a way that they're trying to figure out ways how to remain deflationary, how not to cause even more inflation, right? So these positions may earn annualized $1.5 million yield based on just 1.5% supply rate, right? So why are we pointing these things out, community? We are pointing these things out to just show you that established blockchains such as Ethereum, Aave, Uniswap, they're finding ways how to be more efficient, more sustainable, addressing these 4 challenges because they understand how economy works now. Without retailers, there is no economy. Without transactions, without liquidity, there is no economy. So if you don't have a sufficient, sustainable staking distributions, if you don't address liquidity challenge and inflation challenge, and use your volume efficiently to retain even more liquidity, burn even more supply, and accumulate more USDC, you're missing out. You're literally missing out. And you are not sustainable. And like we read at the beginning of this session, let's go back here just to now bring this home. Let's read this again. This is very important. This is the takeaway of today, is the only sustainable way for an economy to grow is through increased productivity. What is productivity? Transactions. That's the only sustainable way, is if you have an efficient use of your volume. What's the point of having 100 billion in volume and you're not using your productivity, your volume efficiently? That's the only sustainable way. This is not Steve saying it. These are fundamentals in basic economy that you can quickly Google even and find, right? This is how 101, economics 101. You can't have a healthy, sustainable economy if you're not using your volume efficiently. What does it mean to use your volume efficiently? Is as the more trades are coming through, that means the more trades that are coming through, the more liquidity you retain, the more supply you ban, and the more USDC distributions you accumulate. So use your volume, use your productivity to generate even more liquidity, ban the supply more, and accumulate even more incentives, staking incentives. Use it efficiently. That's the only sustainable way for an ecosystem, economy, blockchain to grow, and through increased productivity. And how do you increase transactions? Retain even more liquidity. The more liquidity you retain, the higher your productivity, the higher your volume. So these two feed into each other consistently. The more liquidity, the more transactions. The more transactions, even more liquidity. So these just keep feeding into each other. And as these two are feeding into each other, the supply keeps shrinking and USDC distributions keep accumulating for the stakers. So this is how you create a sustainable ecosystem. And this is the only way. This is not me saying it. This is basic economics. It's the only sustainable way. If you're not doing so, it's just a waste of volume. Look at this. Look at this volume. 39 billion in volume. What is it doing? Is it sustainable? The only sustainable way is by using this volume efficiently to retain liquidity, to lower the supply, to accumulate incentives, staking incentives. That's how you do it. We can go through every top 10, top 20, top 50, top 100 of these cryptocurrencies. They have high volume, but which of them is really using it efficiently, right? That's what we need in this industry. We need to stick to fundamentals, right? We need to stick to the fundamentals. And the fundamentals say that the only sustainable way for our ecosystem to grow is increased productivity, which is increased volume. Volume comes through liquidity. The more liquidity you have, the more volume you have. It feeds into each other, right? So that's just something I wanted to add to it. And just to highlight that institutions are finding themselves in a way, in a situation where they identified that we have some challenges that we need to address. Better late than never. Another point I want us to look at is SWIFT. SWIFT has been in the talks for so long. SWIFT obviously stands for Interbank, is the Society for Worldwide Interbank Financial Telecommunication. This is how banks interact with each other, send money back and forth, or we can also use it to send banks overseas, right? Outside of your geographic region. And this is a very slow and outdated system. So they are heavily into integrating tokenized assets into their global financial network, right? So they want to use the blockchain technology to do that. And this is for, they want to have both the traditional and digital assets on its interbank network. So SWIFT is literally for interbanks, financial institutions, to handle their interbank transactions back and forth. And this only works during bank hours, and it takes days, up to 5 business days to complete. So it's really outdated. So why are we mentioning this? It's because they've been now experimenting, right? And where are they experimenting? Of course, they're looking at Ethereum. That's the only place. Like, he noted that Ethereum is the only blockchain mentioned in Swift's communication regarding its digital asset integration plans. There was never any other blockchain mentioned. This is not me saying it. These are just facts. Ethereum was the only blockchain always mentioned if it came to Swift. Now, Swift, one thing I want to highlight, focused on CBDCs, right? Central bank digital currencies. These are government issued stablecoins. And this is what Swift was mainly or is mainly focusing on. And again, you see here, it was always talking about Ethereum. Ethereum was the only one that it was talking about, right? And right here, you see it too. So this is what I wanted to highlight. And the reason why this is pushed aside is because, as we know, Jerome Powell said that it's not going to happen, right? It's not going to happen. Swift is not, CBDCs are not going to happen. This is something that just, when was it? Yesterday, a few days ago, Powell said that 2 days ago, February 11th. He said he squashed the possibility that the Feds will develop its own digital currency, right? He said that that's not going to happen. It's not going to happen. And this has been a major issue, and it caused a lot of, yes, it happened on Tuesday, right? Tuesday, the central bank will not develop its own digital currency as long as he is in charge, ending several years of speculation. So there will be no CBDC, right? So this is why Swift really is irrelevant. It's really irrelevant because it was mainly focusing on that. Also, if you look at the platform, links over 11,000 members worldwide, right? But look at what Visa, they already have done that. They already put that in place. Like we said, they already launched their tokenized assets platform for banks. Same thing that Swift is doing, they already did, right? So they're helping banks to issue fiat-backed tokens. And look at where they're doing it. They're doing it on Ethereum, right? They're doing it on Ethereum. And that's where they chose to do it. So another thing I want us to highlight here, community, is that, and we've seen this article before. So Visa, like we say, they introduced the tokenized asset platform known as VTAP, Visa Tokenized Asset Platform. And they don't have 11,000, they have 15,000 financial institutions. So Visa's vast VTAP network platform is larger than Swift. And not only that, they already went through testing and all that, and they're ready to be going live in 2025. Meanwhile, there is not a single CBDC that is globally or nationally accepted and embraced. Every nation so far that issued a CBDC, it failed miserably. People want nothing to do with them. Meanwhile, these Visa's platform and MasterCards, they're starting to go live this year, early this year. And what I want to highlight here, community, is that Visa has been at the forefront of digital payments for 60 years. So these are not just highly regulated, well-respected. They have, like we said, 15,000 financial institutions in more than 200 countries and territories, right? And now Visa, they are applying their expertise in technologies such as smart contracts to enable banks to issue and transfer fiat-backed tokens over blockchain networks. And which blockchain did they choose to do that on? On the public Ethereum blockchain. Do we really understand what's happening here? Do we really understand what's happening? We just started this session by understanding how economy works. Economy can only work through a platform such as the one Visa created, because it involves 15,000 financial institutions, banks, that are issuing liquidity. Remember, you can't have an economy without liquidity. and they have 15,000 such as financial institutions in their pipeline within their platform, ready to go. The first one coming out early this year in 2025. So again, plus they have 60 years experience already. So they are once again setting the pace for the industry, like they did with the Visa credit cards and debit cards. Now they're doing the same thing, but on the blockchain. So we are excited to leverage our experience with tokenization to help banks integrate blockchain technologies to our operations, to their operations. So what this does is it gives banks the ability to integrate easily. They don't have to launch their own blockchain like Unichain. Uniswap had to launch their own. Like JP Morgan they have to launch their own blockchain. They don't have to go through all that hustle. They can use Visa's Ethereum-based Visa tokenized asset platform to do that. And VTAP provides platform for banks to mint, burn, and transfer fiat-backed tokens, such as tokenized deposits and stable coins, right? And they can even test it, experiment with it as a use case. This is available in a test environment with plans to support live programs in 2025, right? And when participating banks are ready to launch with end user customers. VTAP requires minimal technical integration as participating banks can access the complete suite of VTAP services via APIs. APIs are literally just plug and play. You can just plug it to your online banking, whatever bank you are, you can just plug it into your existing banking system and boom, you can start right away. You have your own stablecoin. You don't have to, it's just minimal technical integration. You don't have to go through launching a whole new layer 2 blockchain and all of that, right? So it enhances existing financial infrastructures. You don't have to build new infrastructures to be always on and more efficient, right? Easy integration. And of course, programmability VTAP is designed to enable banks to use their fiat-backed tokens within smart contracts. This could help digitize and automate existing workflows and power the future exchange of new types of real-world assets. That's it. And interoperability, this is the best part. Because VTAP is using their platform, Visa's vision is to enable interoperability across different blockchains for banks utilizing VTAP platform, which is obviously on Ethereum. So with a single API connection, VTAP, in the future, banks can enable multiple use cases and interact with partners and clients on both permissioned and public blockchains. So they can still interact with private and public blockchains. To support broad ecosystem adoption of tokenized assets, Visa is committed to enabling safe and secure cross-chain exchanges of tokenized real-world assets, so on and so forth. So they are the ones that already have the infrastructure ready. They make it easy for their 15,000 financial institutions to onboard them. And this is exactly what's happening. And like we said, BBVA is the largest bank in Spain, and they're already using it and been testing it throughout these years. And it has been testing the sandbox functionalities, including the issuance, transfer, redemption of bank token on testnet blockchain, right? As well as interactions with block of the token with smart contracts. Global and launching an initial live pilot to select customers in 2025 on public Ethereum blockchain, of course. So why are we talking about all of this, community? Why is this so interesting? Why is what Visa is doing and MasterCard so interesting? Right now, we have our DeFi wallets, but can you go at a gas station, a grocery store, a retail store, and purchase anything using your MetaMask wallet, your Trust wallet, Coinbase wallet? No, you can't. So with this new technology that is going live this year, early this year, you have the wallet lined up ready for you to go. And just like Apple Pay, Google Pay, and all these other cash apps and all these things that even Twitter wants to do, your local bank turns your phone into a payment machine where your wallet is literally a payment system as well. So whatever you have in your wallet, you can now use it to pay for your groceries, your gas, your bills, using the existing infrastructure of Visa and MasterCard. That's where we are getting to. That's where we are now. From your wallet. No more need to send it to your bank, to send it to crypto.com or Binance and go through all that hustle. It's one wallet, and that one wallet enables you to make all the payments that you want using all these payment tokens, including regulated stablecoins. Any token that you have, you will be able to use it and make your payments instantly. And like we saw here, Visa has established 15,000 financial institutions, right? And they're in 200 different countries and territories. So there's not just some small time company. They have 60 years of experience. They have a large network. They are regulated in over 200 countries and territories. This is instant. And this is just Visa alone. We looked at JP Morgan, we looked at all these 15,000 other financial institutions that are also easily will be able to onboard. And then they don't have to have any extensive blockchain experience, because VTAP requires only a minimal technical integration. And they're using APIs, which is just plug and play, easy. And it's designed to help existing infrastructures already. It doesn't take much. So you see that these individuals, they're ready to roll and go. Like they say, the pilot is leaving in 2025. That's when these things are being rolled out already, right? Like we see here. We see here that with selected customers in 2025 on the public blockchain, Ethereum blockchain, they're going live. So why are we saying all of this? It's because when we go back again, we should understand what makes an economy run, right? What makes an economy run is transactions, community. And besides transactions, it's this right here. Capture liquidity, right? And if you want to bring the existing financial system on chain, we need to be able to provide all of these services, right? We need to provide financial services such as loans. Can you lend? Can you borrow? Do you have any savings accounts that you can? Do you have these products? Do you have any investments products, the opportunities? Can you stake and yield? Can you do all these things? Can you take out a loan without the bank? Can you do all of these things? And as we speak, community, this is exactly the reason why. When this is the biggest politician, she's a senator, very famous, that is really pushing Bitcoin to pass the reserve bill, known as Senator Cynthia Lummis, right? She's been pushing forward the bill for a strategic US Bitcoin reserve for the longest. She's been campaigning, and the plan was to acquire 1 million Bitcoin over the next 5 years, right? That's the plan. And already 15 US states, including Utah and Florida and all of these, have already state level reserve financial already have issued also are jumping on board to get this done, right? And Cynthia Lummis, she reaffirmed her commitment, right, to advancing legislation that would establish a strategic Bitcoin reserve in the United States. And she said that she's been speaking and discussing the progress with of the Bitcoin Reserve Bill to many people, right? And this bill proposes that the U.S. government gradually acquires 1 million Bitcoin over the next 5 years and then holds it for 20 years, right? Now, this is what's happening right now. In a recent interview, the U.S. Senator Loomis said that she has been trying to gather Senate supporters for the establishment of the Bitcoin Reserve strategy. The law needs 60 votes for approval, right? And this will only be possible if Republicans and Democrats support the bill. And Loomis has affirmed that the interaction with the lawmakers have been good, but more efforts must be made in order to advance this bill. Now, keep in mind this article is 11 days old. This is from 2nd of February. As we speak right now, as we were going through our community event, she's speaking live right now, giving people an update on what's happening. This is what I was listening into before we started this session. And she clearly said that she's not getting the backing right now. That's the update as of today. She is not getting the backing from the Senate. She's not getting it. And they actually told her that both Republicans and Democrats, they're not supporting the bill. They literally told her that this is not our priority right now. And they don't understand or see the use for it. This is what she's been told. She should put this aside right now because it's not a priority. So this has been all over the news and people have been just talking about it, pounding on it and pushing it. And today she gave an update that she's not getting the support. They are not understanding it. And right now it's not the priority right now. And it's not happening right now. She should just put it aside and focus on stable coins, focus on market structure, meaning what is a security, what is a commodity, and then focus on choke point 2.0, meaning the banks should not be hostile towards crypto projects or crypto users, consumers, retailers. That's the priority right now. That's the update as of today, as she was going through the interview with a Bitcoin magazine or something. That's what she said, right? It's not going to be approved. They told her, we're not going to support you on this bill, to pass this bill. We're not going to support you with it. And let's not take their word for it. Let's look at what the executive order is actually saying. And we're going to close out with this. Let's understand this. So this to strengthen America leadership in digital financial technologies. This is an executive order, which was issued by the president back in January 23rd. This is why we say knowledge is power. If you understand something and you're not just blinded by sentiment and emotions, understand something. I mean, it's being laid out to us word for word what the priority is. And if you understand something, you won't be surprised that there won't be no Bitcoin strategy, at least not on a government level, Fed level. She got the message very clear today by her fellow senators. They're not going to help her to pass this bill because that's not their priority. What is their priority for the executive order? By the authority vested in him as president, by the Constitution and the laws of the United States of America, in order to promote United States leadership in digital assets and financial technology while protecting, what is he protecting? Economic liberty. It's all about economy. Keep that in mind. Don't take my word for it. Let's look at number 1, section 1. The digital asset industry plays a crucial role in innovation and what? Economic development in the United States. Why did we start with what is an economy? What does it take for an economy to work? This is the reason why. For an economy to work, you can't have an asset that you lock up for 20 years and has no any economic, doesn't give you any cash flow. You can't build on it. That's not how you build an economy. You need transactions, you need liquidity. If you don't have those two things, how will you grow an economy? And the executive order is telling you here that they want to use these digital assets, the industry, they want to use it to innovate and to grow and develop the economy of the United States. Right? This is what it's all about. And it even tells you here, it is therefore the policy of my administration to support the responsible growth. How can you grow an economy? You need transactions and you need liquidity. And you need to bring all that onboard it on chain. And it tells you even here, on blockchain technology, it needs to be used. And use of digital assets, blockchain technology, and related technologies across all sectors. It's right in the first sentence alone. This alone should be enough for anybody with a sound mind to understand that there is no talks about Bitcoin here. They're talking about a technology known as the blockchain technology. They're talking about growing an economy. And if you have a basic understanding of how economic works, you understand that for an economy to grow, you need to use this technology for growth. And how do you grow an economy? You need transactions and you need liquidity. And you need to put in liquidity that is well adopted already across board. What is that? It's the US dollar. So if you want to bring that on chain, what do? Digitalize that dollar. But don't take my word for it, right? Let's look at what they say. Promoting and protecting the sovereignty of the United States dollar. These are not my words. Including through actions to promote and develop and grow of lawful and legitimate dollar-backed stable coins. I mean, it told us this on the 23rd, clearly. But if you don't read, you don't understand, you don't have the knowledge, today's message is a surprise for you. Oh, why are they turning it down? They were telling us that. And if you want to grow an economy, you need retailers and you need liquidity. And the most liquid asset in this world is the US dollar. And you need to tokenize it in order to, this is what they say. You want to promote and protect the sovereignty of the United States dollar. This is their number one goal. This is what they're telling you. And you need to provide regulatory clarity. And this is what she was told, that put that aside. What we need to focus on right now is to strengthen the dollar. And we do that through legitimate dollar-backed stablecoins worldwide. And we need to build an infrastructure about it. How do you do that? We need to use the blockchain technology to do that. Right? And there will be no CBDCs. So even what Jerome Powell was saying, it wasn't up to him anyway. I mean, the president already said there would be no CBDCs. So all these things that we're hearing today from Loomis, these are things that we know since January 23rd. Nothing, there's no news today. These are things that it's right here. It's an executive order. We've been told there's nothing about Bitcoin Reserve here. All we read about is the blockchain technology and how it's about the economy and how we should grow the economy, right? It's about the growth of the economy, the economic development in the United States. And it's about protecting and promoting the sovereignty of the US dollar. And this is by growth, development and growth of lawful, legitimate dollar-backed stablecoins worldwide. How do you do that? You do that by providing regulatory clarity, right? And you use that by using permissionless blockchains and distributed ledger technology. That's how you do it. It's right in front of our faces. And this is exactly why we started by educating us as a community. What does it take? This is why in DeFi, you don't need banks. Remember what we saw here? It tells you can even back it with your Bitcoin or your Ethereum, your stable coin. You can back loans. No banks are needed. No paperwork. It's purely on-chain. You can only do this where? Bringing the world on-chain to create a global economy built on what? Built on Ethereum, built on the super chain. The home of DeFi is Ethereum. This is where all of this is taking place, right? And also, this is where all of this is taking place. When you're regulated, you can provide crypto assets, staking, savings plans, and other crypto products, right? This is how you're building on top of the blockchain technology. And these are not my words. This is the executive order issued by the President of the United States on January 23rd. The focus is here on the growth of the economic development of the United States. It's about the growth of the economy, and you do that using the blockchain technology. And you need to protect the sovereignty of the United States dollar. When you do that, you also strengthen the bond market and you slow down the debt crisis. That's what it's about. And you do that using legitimate dollar-backed stablecoins worldwide. When you do this, you're promoting or strengthening or bringing demand to the debt market, treasury bills. And you do that using the distributed ledger technology. And there will be no CBDC either. We already know all of this. So what Cynthia Loomis was telling us today is no news. She's just repeating what the executive order said already. And her friends at the Congress, Senate told her they're not going to back her, give her the support to pass the Bitcoin reserve bill. It's not going to happen. So that's what she was told. And before or during this community event that we were going through, right? This is not to bash Bitcoin or anything, but this just to tell us that knowledge is power. If you really understand what's happening, if you really understand how economy works and what it takes to run an economy, and even in this executive order, we're being told how economy works because they're telling us how economy works. You have to promote the dollar, put it in the hands worldwide. It needs to be promoted worldwide. Put it in the hands of retailers, businesses, and the established infrastructures like we've been seeing here. We saw Visa establish these infrastructures, right? Even SWIFT came up with them. These are established infrastructures, community. There's a reason why Visa and MasterCard are establishing these platforms on Ethereum. They're facilitating and they're part of the solution, not part of the problem. They're doing what the executive order is saying. Promote and strengthen the sovereignty of the United States dollar. That's what they're doing. Put it in the hands of businesses, financial institutions. That's what you need to run an economy. And then put it in the hands of consumers. How else will you run an economy? By purchasing a commodity and locking it up for 20 years? That's not how you run an economy. That's not how economy works. You don't have to be an economist to understand that, right? So this is why when we see things like these, or we hear hype like that, let's not get carried away. Let's understand that economy is run on a blockchain, on a digital ledger technology. Visa knows that. They're running it on Ethereum blockchain. Even the president knows that, right? He's saying it's a blockchain technology, and all of these things will not happen unless we use the distributed ledger technology. That's where it takes place. That's the only place it's going to happen. And it's about self-custody, maintaining self-custody of your own digital assets. And it's about the ability to deploy and develop and deploy software, which are smart contracts, right? That's what you need. So again, how blockchain is a new way to run an economy, community. To run an economy, you need transactions and you need liquidity. And this is what the executive order says. And these are the infrastructures that Visa are building. They're onboarding financial institutions that will take on loans to bring on liquidity for the consumers, retailers to consume, right? This is why Visa is onboarding banks, financial institutions to facilitate liquidity. And it's doing that on the Ethereum blockchain. So we are about to experience, like we always say, a flood of liquidity. And everything is according to plan. This is how Visa and MasterCard are promoting and the sovereignty of the United States dollar by allowing banks to issue their own stable coins. This is why there won't be no CBDCs. But because they can create these financial institutions and partners, they can create their own fiat-backed tokens. Fiat-backed tokens. This is on the Visa website. Visa website says they can experiment in launching their own fiat-backed tokens. And if we go to the executive order, why does it say the same thing? It says the same thing right here. Let's go right there. It says that protect and promote fair and open access of the banks. Of course, this is very important as well. So everybody should have access to the bank, but promote and develop the growth of lawful and legitimate, what is it? Fiat-backed, dollar-backed stable coins, and promote it worldwide. Exactly word for word what Visa is promoting. They're saying it here. They're enabling you to issue your own fiat-backed token. Where? On VTAP. So everything is going according to the plan. These are the infrastructures needed to make an economy grow, a digital economy to grow. So we are moving traditional finance and bringing it on-chain community. Why is it so important for us? Because it's on the Ethereum blockchain, the home of DeFi, where you can do all those things that are needed for an economy to grow. Staking, yield, lending and borrowing. You have all these different banking products that are about to be onboarded in 2025. Bank of America already has like over 100 patents for banking products issued out. On and offboarding are in place. You can have a wallet that you can use right now to make your everyday payments and purchases. So they're bringing all these utilities and use cases into the hands of retailers, you and I. And they're already across 200 countries. They have all the regulatory clarity, 60 years experience. Everything is about to be launched and rolled out in 2025. And these are not meme coins that are seasonal. These are established institutions that have been around for almost 60 years. These are the largest asset managers like BlackRock, largest banks like JP Morgan, second largest payment processors like MasterCard, that are coming and building infrastructures on Ethereum. They're not going anywhere. They'll stay here for another 60 years. And bringing all this liquidity rushing through Ethereum. And what happens when you have so much volume on Ethereum? It becomes deflationary, right? And this is why you see we saw that it will make it so interesting. It will make Bitcoin, it will make Ethereum very attractive. And this is why you see Ethereum being staked. That's the next step, is getting ready. Ethereum ETFs are getting ready to be staked. And once this happens, it's on now. Because now for the first time, you have an asset that has a cash flow. That is not the United States dollar. That is not a treasury bill, but is a digital asset that is deflationary, and you can easily stake it. Like the upgrades are coming next month. Easier stakeable, scalable, and you can use your wallet that is a smart contract to pay your gas fees, even with stable coins. So all these upgrades, everything that is coming with staking for Ethereum, and all these upgrades on the Ethereum network, and all these infrastructures built by Visa and MasterCard, by BlackRock and JP Morgan, they all chose Ethereum to do that, the home of DeFi. And the executive order clearly says everything will go through and will be achieved through digital ledger technology, through the blockchain technology. And the largest blockchain technology and smart contracts blockchain is Ethereum. And to close this and bring this home, community, there is no way you can make the most out of this if you don't capture all of that is coming. You need to capture all of this. And just to make sense out of all of this, remember we said liquidity and transactions go hand in hand. Where there's liquidity, there'll be transactions. This is why we stress so much and have different mechanisms in place besides just through the volume. We are 3% goes towards retaining the liquidity, but beyond that, we put aside 10% that is being staked and is earning USDC as well. And this will be just used for buyback and restaking. That's it. Just restaking, just constantly restaking. And that's all it does. And as it does so, obviously, it contributes to the volume. And this just accumulates even more liquidity and burns even more supply and accumulates even more USDC. But it goes beyond that. We have unlimited staking boosters, and these, if you want to unlock 100% of your USDC distributions, you need to stake 5 of these, right? You need 5 of these to maximize your booster, your boosting level, right? Your USDC distributions, and we're using the revenue generated from these NFTs. And we actually add it into our liquidity pool, right? This is how we build a sustainable, healthy liquidity, right? There's 3 different ways. And actually a 4th one is now the community doing that. The community now can do the same thing, just keep restaking with their USDC distributions. So we have 4 different ways: through the trading volume itself, by the 10% to restake, by the NFTs, and the community doing it. 4 different mechanisms just to have a sustainable liquidity. And then, of course, volume also will keep lowering the supply. And if you have a staking platform, you want your supply to shrink. You don't want to cause inflation, right? And you also need sustainable staking distributions. And that also comes through the volume. The more volume, the more USDC distributions. And this is the beautiful part of this. Usually we have a one fixed amount of distribution, and the more people stake, the less distributions. But with our ecosystem, it's actually different, because the more volume, the more liquidity, the more volume. The more volume, the more USDC distributions. It's not limited to a certain fixed rate. It's dynamic depending on the volume. And it's sustainable. So these are the things, these are the strategies, mechanisms implemented through smart contracts using the blockchain technology to change the economics using the blockchain technology. And this is done because we understand how economics works. You need to put liquidity in the hands of the community. And they need to make their own decisions what they want to do with that liquidity, and not wait every 4 years for the Feds to decide whether they want to cut or raise interest rates, and whether they want to give or remove liquidity from the hands of the retailers who are responsible for 70% of the liquidity. This way, every community member can decide for themselves what they want to do with their USDC distributions. Do they want to compound it? Do they want to use it in the everyday life? That's up to them to decide. And that's what decentralized finance is all about. Give the power of choice, and give the authority to hold your own asset, be your own bank. Give that power to the community. Let that decision be based on the individuals themselves, right? And this is what this platform is all about, community. Addressing the 4 challenges, empowering the community to make their own decisions, whether they want to use the liquidity, compound it, and be part of a platform that is addressing those 4 challenges: inflation, lack of liquidity, inefficient staking, unsustainable staking distributions, and inefficient use of volume. Community, on my side, that's it for today. I hope this session today was able to shed some light on how economy works. And once we understand how economy works, we can really embrace and appreciate. We can appreciate our ecosystem, right? That's the only way we can appreciate something, is when we understand how it works and the added value it brings, it gives us, right? So let me come to your comments, community. Let's start going through your comments, as there is quite a bit. Queen Aloshi says it's another opportunity for us to have our eyes opened by the great crypto guru, Dev Steve. What a blessing God has given us, family. Let's embrace it wholeheartedly. Thank you so much, Queen Aloshi. You are very, very much appreciated. We appreciate your consistency, your commitment, your engagement, your leadership. You never miss these sessions. You're always attending them. You're very much appreciated. Great brother Theo says, greetings and happy Thursday, my great brother Steve, dearest great mama Wino, and my wonderful BRL family. I can't wait for this session to start. Excited for what our great professor has in store. Always a pleasure to see you, my great brother Theo. I hope you and yours are doing fantastic. You're in good health. I hope that this session today was able to satisfy your curiosity, and that you were able to take away something from today's session. Thanks again for everything, great one. Thank you too, great brother Theo. Always a pleasure to see you in the community. Queen Beatrice says, good evening, community. Good evening, Queen Mother. Good evening to our Professor Steve. We thank the grace of the Lord that has made us to meet again on this platform to be educated and informed. Beautifully said, Queen Beatrice. You're very much appreciated. You're consistently participating in these events. Your feedbacks, your comments, your engagements on the various platforms, they're all very much appreciated. Thank you for your efforts that you're putting in, and your leadership as well. Queen Debbie says, greetings, BULLRUN community. Greetings back to you too, Queen Debbie. Queen Mother Caroline says, we are in the right place at the right time. Buckle your seatbelts and enjoy the ride. Our lives are getting ready to change. Thank you, son. Thank you so much, Queen Mom. Very, very much appreciated. You're very, very much appreciated for your leadership, your consistency, your encouragement. These are very encouraging words. Well received, very much appreciated. Queen Lati says, greetings, BULLRUN community. We are so privileged to sit back and listen to our Professor Steve taking us through. Tighten your seatbelts and be ready for takeoff. Thank you so much, Queen Lati. I still appreciate your feedback from the last community event. It goes a long way. We appreciate your consistency as well, and your efforts that you're putting in. Very much appreciated. Queen Patricia says, evening, family, and our developer Steve. Thank you for your commitment and dedication. Always stay blessed and protected. Always. Thank you so much, Queen Patricia. Very, very much appreciated. Your commitment is also, and your consistency, very, very much appreciated, and your leadership as well. Queen Patricia says, hello, BULLRUN family. We are happy and ready to be educated, informed, and inspired. Queen Patricia, you're very much appreciated as well. And I hope today's session, you were able to take away something from today. Then we have Queen Resego. Resego says, good evening, family. So happy to be part of today's session and looking forward to receiving from our best developer, Brother Steve. Thank you for your kind, very warm words. I can only give it back to you and the rest of the community. This is a team effort. It's not a one queen, one king show. It takes all of the kings and all of the queens in the community to engage, participate, and the key word here is consistently, right? So I can only give it back to you all. Thank you so much for your engagement and your participation. We have the wonderful Queen Val here. Hello, Bull Runners, and happy Thursday to our amazing teacher, Mr. Steve. So excited for yet another session. So eager to hear more about the blockchain economy. We appreciate you very much, Queen Val, as well. I hope you are well. To the new members, the fast timers in our session, feel much welcomed and free to join our Telegram communities. Those who have not yet, here are the Telegram links to BULLRUN, to Killer Whale, and Survivor community. Feel free to join our community, as we are very, very engaged, very active on various platforms. So be part of this movement. This is the best way to take advantage of the known so-called network effect, right? That we always talk about. The difference of network effect is that you don't have to produce any goods. Like, we made examples between Apple, for example, and Google, right? And the beautiful thing about this blockchain technology is that it's all about the network effect. The more we grow, the value comes from the growth and adaptation of the platform, of the technology. And building or having such a great ecosystem that is addressing major challenges, and the only way to have a sustainable economy, the only way, what we learned today, is that through transactions and liquidity. Those two go hand in hand. And that's our specialization. We specialize in retaining liquidity and using the volume efficiently to retain even more liquidity, burn even more supply, and accumulate even more USDC. So we are ready to take advantage of what's coming our way, community. Queen Kinole says, greetings, family. It's time to expand our knowledge. Absolutely. And I hope you are able to take away something from today's session. Queen Kinole, you're very, very much appreciated. We appreciate your attendance today. Queen Esther says, hello, BULLRUN family. Looking forward to another great evening of unpacking knowledge and information. Thank our developers, King Steve, and our beautiful Queen Mom, for unwavering dedication. We can only give it back to you too, Queen Esther. You never miss these sessions. You're always giving your feedback, attending these sessions. Your leadership, which you display by example, is very much appreciated and goes a long way. Then we have Queen Grace says, it's another beautiful day to learn more about blockchain technology from our own man, Steve. Thank you for giving yourself to enlighten us on this industry. More grace to you, Steve. Thank you so much, Queen Grace. We can't appreciate you enough. We can't highlight your dedication and commitment enough. You're very much appreciated. And may all be well with you and yours as well. We have Queen D says, tuned into another great session. Glad that you were able to take away something from it today. Queen Poloko says, greetings, BULLRUN family. Greetings right back at you too, Queen Poloko. Then we have Queen Alice says, greetings, great family. Thank you, our developer Steve, for educating us on our Queen Mother consistently and tirelessly. Salute you, much love. We appreciate you very much, Queen Alice, for your consistency and your efforts, your leadership, very much appreciated. And may it be well with you and yours as well. We have Queen Mel says, happy Thursday. Greetings, family. Greetings, our developers. Good to hear again today on this platform of informative and educational opportunity. Very, very much appreciated, Queen Mel. It's always a pleasure to see you in the community. You're very much appreciated. Queen Viola says, greetings, PRL family. Another exciting day of knowledge expansion. Thumbs up to our developer, Mr. Steve, and our dear Mom Awino for their dedication. Very much appreciated, Queen Viola, for your dedication, and your consistency also goes a long way. You are very, very much appreciated. Queen Jane says, happy Thursday, BULLRUN family. Thanks once again, our developer Steve and our mom, Queen Awino. I appreciate your tiresome work and the love you have for the community. Be blessed. Thank you for your very heartfelt and very warm encouragements. Very much appreciated, Queen Jane. We can only give it back to you as well for your commitment, your leadership by example, your consistency. It goes a long way. Your presence for the community goes a long way, and you're very much appreciated. Queen Grace says, greetings to BRL family. Thank you, Queen Mother and our dev Steve, for your consistency and keeping us very informed in our crypto journey. Many blessings to you. Many blessings to you too, Queen Grace. I hope you and yours are doing fantastic, and your consistency is very much appreciated, and it goes a very, very long way. We have Queen Potlako says, greetings, BULLRUN family. Greetings right back to you, Queen. I hope you and yours are doing great. We are pleased to have you in the community. Feel right at home. My great brother Abdullah, he says, warm greetings, BULLRUN family. Warmest regards to you as well and yours, great brother Abdullah. I hope you are great. We have Queen Patricia saying, greetings, BULLRUN family. It's another great day of getting inspired by our developer, Mr. Steve, and our dear mom. You never tire. I appreciate you. Thank you so much for your very warm, encouraging, uplifting words. We can only give it back to you too. You never tire as well. You're always present, always dedicated, always giving out feedbacks, always engaging on various platforms. Very, very much appreciated. It goes a long way. Queen Marilyn says, enjoying the great session. There's a great feedback. Glad and pleased to hear that you're able to take away something from today's session. And that's the whole purpose. That's the whole idea. So we are very, very much appreciated for that. Queen Ali says, this is awesome. Having rewards in USDC means we are set based on what's coming in ETH. We are already ahead. Thanks, Steve. This is marvelous. You are surely a genius. God bless you. Thank you for your very kind words. Thank you for your welcoming words as well. I won't take the credits alone. This is Mom's vision just as much, and Mom's efforts as well. And me being her son means that I'm just learning from the best, right? So thank you so much, Queen Alice, for your feedback. And well said, very well said. That's the beautiful thing about this, is that it's built for the network effect, right? The more adaptation, the more volume, the more liquidity, the more supply that is being drained or removed from total supply, and the more USDC distributions that comes on, right? So it's a really positive feedback loop that grows based on the network effect and adaptation. That's the beautiful thing. So yes, absolutely right. We have Queen Matafeni says, greetings, greetings back to you too. Very insightful presentation. Glad that you were able to take away something from today's session. We appreciate your feedback, and that you are participating consistently. It goes a long way, Queen Joko. Then we have my great brother Dave says, thanks for the great session, my brother. I hope you are doing well. It seems to me that the bull run will not start until crypto regulations are in place. We all know who controls the economy and the world. Always a pleasure to read from you, brother Dave. And like we said, this industry is always forward thinking, right? They always think and price in things ahead of time. It won't have to really be passing. Similar with Bitcoin, right? Just the anticipation of the president keeping his promise during the campaign pushed Bitcoin's price above 100,000, right? Even though to this day there is no Bitcoin reserve, and there will not be based on Senator Loomis' update today, it still pushed the price so much. And similar we'll also hear similarities, right? Once there are updates and we start seeing these institutions starting to launch their products and roll out their products, this is going to be anticipated and looked at positively in the eyes of market participants, and they will try to get a head start in accumulating Ethereum. And this is what we've been seeing with the president himself, with his DeFi platform. Again today, they made a major purchase again. We saw Goldman Sachs purchase 2,000% more of Ethereum, both Ethereum directly and the ETFs from Fidelity and BlackRock. So we see institutions piling up on Ethereum and getting ready for what's about to come, right? So this is definitely something that we need to understand, that this industry, it's about forward thinking, it's about sentiments, and sentiments are enough to move the markets, right? And these are not priced in yet, right? Because people are still so flashed with Bitcoin reserve. Once the reality sinks in that the agenda is to actually strengthen the dollar, and that is by issuing or regulating stable coins and real world assets, tokenizations, and all these infrastructures built by Visa, MasterCard, JP Morgan, and BlackRock are on Ethereum. Once this is common knowledge and really it sinks into retailers' minds, they're going to start anticipating and trying to front run uh, this cycle and start to accumulate Ethereum. As we see, smart money institutions are already piling up Ethereum in the millions of dollars, right? So, with that said, who else is here? Great Uncle George says, "Hello, Steve, Queen Mother Winner, and our wonderful community. I must confess that it was not for the valuable. It was. It were. It if it were not for the valuable knowledge we get from Steve, I would have cracked by now. The crypto industry is volatile." Absolutely, well said, Uncle George. Volatility is big, especially the industry is still very illiquid, so it doesn't take much in comparison to other assets, other markets, such as the stock market is 50 trillion, right? So 25 times bigger than this one, roughly. And if we look at the treasury market, like the bond market is even bigger, is 400 trillion. So these are more liquid industries than this crypto industry. And it's also, another part is also is being manipulated heavily as well, as we know, but this is just part of the game. And yes, this is the reality right now. However, looking at the big picture and what's coming, it's those who really understand what's going on and have the patience and oversight to persevere and go through all these shakeups, volatility, that eventually will make it. We often hear how those who are successful, those who made it, they were just lucky, but that's not true. Those who will make it, well, there are so many adjectives to describe them. Amongst those adjectives is patience. They have perseverance, and they have oversight, right? They have the calmness, the peace of mind, the understanding. They're knowledgeable enough to understand that this is part of the journey, right? Many want the end result, but don't want to go through the storms, the tornadoes, and the earthquakes and the hail and going through all the pain. They don't want to go through that. Let's fast forward and just get to the result, right? But that's just not how reality of things are. And those who can persevere and stick with it and look at the big picture and understand that we're in this together. None of us is in it alone. We are all of us are in it together, right? And those who have the patience and the oversight to go through this, just like Uncle George said, this industry is volatile and it hits us with so many things left and right. But those who persevere, they will not be described as lucky. They'll be described as they were patient, they had the oversight, and they deserve to succeed, right? So thank you very much for your feedback, Uncle George. Queen Emily says, thank you, Brother Steve. Thank you as well, Queen Emily, for consistently being part of these sessions and participating. Queen Jane says, great lessons to make us grounded so we can be informed, to be patient, family. Beautifully said, Queen Jane. That's the toughest thing to do sometimes, right? Just to be patient and just to stay engaged. Let's participate. That's sometimes harder than have to do something, right? But that's what we need to do right now. Let's remain focused. Let's remain patient. Let's pass through these storms and volatility, like Uncle George said. And once we can manage to go through it and get on the other side of the rainbow, that's all we need to do, right? Everything is being lined up already for us. The perfect storm is right here, right? So let's just be patient enough and get to where we need to get. And only those who have the patience and the oversight will succeed. Everybody else that is not, will be shaken off, fall in the wayside, lose their patience, and miss out on all of this, right? And the beautiful thing is that besides all other assets, Ethereum is the one that has really not even gotten anywhere close to its all-time high from the last bull cycle. It's the one that has been left out. There's so many catalysts still that are coming for Ethereum specifically. Like we said, through the regulations, the ETF staking, that alone will be a big deal. Secondly, we see how Visa, MasterCard, BlackRock, and JP Morgan, the largest players in financial industry, have chosen Ethereum, and they're rolling out their products, their infrastructures this year, early this year. And once that happens and it hits mainstream news, we're going to see people starting to front run and piling up on Ethereum, and it's going to be based on sentiments, right? And we are already in it. So all we need to do is be patient to us, right? Queen Mother Wino says, greetings, BULLRUN family. Blockchain technology will change our world more than people imagine. Beautifully said. Everything will be tokenized and connected by a blockchain the soonest. Thank you, Steve, for a great session. There's really not much to add to this. And this is the reality of things that maybe has not sunken in yet. Just like people are saying the internet back in the early 90s will dominate our everyday life. People are like, what are you talking about? You can't do anything with the internet. We don't need internet. And now fast forward, look what happened. Same with during the mobile technology. We don't need a mobile phone. I have it at home. When I need it, I'll use it. I'm leaving the house. I don't need a phone. I don't need a mobile phone. But look at now, we can't live without it. Our whole social life is on there. Our whole financials are there. The way we use e-commerce is through mobile. The way we communicate, even the way we earn our living is through mobile, right? And same thing right now, technology, like Queen Mother Wino said, this is going to change our lives, how we operate, how we invest, how we save, how we build businesses, how we interact. It will be on chain. And if we look at things that way, it will help us so much more to understand that, hey, we are so early, and who has the opportunity to be part of a large technology, groundbreaking technology such as this, and be not just part of it, but be the pioneers within that community, within that ecosystem. As we gather this knowledge and understanding, it should put us at ease, like Mom said, to really go through these storms right now, right? Regardless of what's happening left and right. So thank you so much, Mom, for your feedback. You're very much appreciated for your consistency as well, your leadership by example, your daily tweets, your encouraging tweets that are very informative also and educational. Very, very much appreciated. And much respect for your leadership by example as well. Queen Beatrice says the economics of today were really eye-opening. Thank you for the lesson. Thank you so much, Queen Beatrice, as well. We appreciate your feedback very, very much. It's always a pleasure to see you consistently participating in these community events. Queen Kube says, hello, Bullrunners. Joined very late today. We'll catch up on the recording. I know, as usual, a lot was at stake today. Thank you, Steve, for your commitment and consistency. We can only give it right back to you too, Queen Kube. Despite your lateness, you take your time to re-listen, to tune in. We appreciate your feedback as well. Your participations, your consistency, very, very much appreciated. My great brother Theo says, "What an awesome session, great one. I don't know how you are able to consistently feed this community with so much education, knowledge, wisdom, care, and love. I know you have your life outside of BRL that you take time from to nourish this community, and we are very thankful. You are very much appreciated, my great brother. Salute. Thank you so much for a very, very warm, very kind, very thoughtful words, my great brother Theo. It goes a really long way. And I can only give it back to you as well. We appreciate your commitment as well, your consistency, and your beautiful, encouraging words. You mean that you make a major difference also for the community as being part of this ecosystem. And we all do that. We all took our time to be part of this session. So it's not just me alone in this session. So I don't want to take the credit. It's you as well. You're taking your time from your family, from your families to be part of this session. You're taking your time, your free time to, to listen in, tune in, learn, engage, participate. So we are all just adding value in our own unique ways that we know best, right? Like we say, and we can't stress it enough, it's all about a team. It's the teamwork. The team makes the dream work, right? It takes all the queens, all the kings to participate, engage, and the key word again is consistently, right? Consistency is key, and that goes a long way. With that said, community, I want to thank you all for participating. It's been another successful, beautiful session. I hope that there was something that you were able to take away from today. If anything, to understand how economy works, and it works through transactions and liquidity, right? If you take advantage of retaining liquidity, transactions will come. And if you use your transactions efficiently, you'll retain even more liquidity, you'll burn your supply, and you'll accumulate USDC for the stakers. It's a win-win-win for the staker, for the trader, and for the holder as well, right? That's how you prepare and take advantage of what's coming. Another thing, DeFi is the future. Like Mom said, blockchain is here to stay. If you understand that DeFi is the future, don't we have to make DeFi work? How do you make DeFi work? It's simple. Be part of an ecosystem of a platform that is addressing these four challenges: lack of liquidity, inflation, unsustainable staking distributions, and inefficient use of volume, right? Have a platform that is addressing these four challenges. One. Secondly, be part of a community that has regular, consistent educational sessions such as these, so we can grow together, uplift each other, and take advantage of this network effect. We grow and gain value by adaptation, and as our community keeps growing. This is a movement, and the more and faster we understand and identify how economics work and how monetary systems work, how inflation affects liquidity and how liquidity affects an economy, and how transactions play a major role in an economy, we'll appreciate our ecosystem. With that said, community, I want to wish everyone a wonderful rest of the week. And till we meet again, community, bye bye, everyone. Have a wonderful week.